Stocks have had a huge run. Now it's time to look for some of the best undervalued stocks to buy for the month of September. Let's get to it. So look, we're looking for undervalued stocks. I like to start from the top, right? And look at what the market has been doing. And the best way to do that is look at the big money index. And it is a barometer for big money going in and out of stocks. And here's what's interesting about it, right? Volumes have been increasing, right? Money's been going into stocks. We actually broke into the overbought area. That's this red line here. That's 80%. So that means that over the past 5 weeks, 80% or more of our stocks that we're tracking, money appears to be going into it. Now, what's cool about this is we haven't broken into overbought for almost 2 years. The last time it happened was in December of 2020. And now what's interesting is, right, we're in an overbought market and we're heading into September. September tends to be a bumpy ride for stocks. And over the past 20 years, the average returns have actually been negative according to FactSet. So we got to start looking for undervalued stocks. We know that the market is short-term overbought. We can see that with the big money index. We know that we're heading into September, which historically is a bumpy month. So how do we go about finding undervalued stocks? Well, we know that the S&P 500, the forward PE is just over 17.5. So I'm going to be looking for stocks that have a forward PE that are less than that, right? Because you want cheaper stocks, undervalued stocks. They might actually handle volatility a little bit better. And keep in mind, none of this is personalized advice of any kind. Just want to make you smarter using data. So if you like this type of content, make sure to like and subscribe to our YouTube channel. Give us a thumbs up. All right, let's get into some stocks. The number one undervalued opportunity is Skyworks Solution. This is a big time semiconductor name. Full disclosure, I own it in personal and managed accounts. Now, this is a name that I have held for years, right? And it has been battered this year like a lot of stocks. So the big money has been coming out of Skyworks just like a lot of stocks, right? What stock hasn't? But there are some signs of life where there appears to be some institutional support. So that means that the shares are actually gaining, right, as the price is rising. And look, that's what you want to see. Now, we haven't seen this stock appear on our top 20 list in a while, but historically, this name has been a huge monster winner. And look, these blue signals, they indicate the times that Skyworks was a top ranked stock in our process. Historically, that means that these stocks tend to go higher. Not always, but Skyworks, I think, has a lot to like. Very attractive name. So let's go ahead, not just look at technicals, but also look at some fundamentals. Give us a picture of this name. So the 1 year sales growth is 52%. That's actually outstanding. The 1 year estimated EPS growth is 3.8%. So anything positive is good. Profit margin, 29%. That's healthy. Forward PE, again, well below the market average at 9.3%. So this could be very undervalued. And then on the technicals, there's two that I'm looking at. The last buy signal was in early August, so that's a positive. It also trades near its 12-week high. I'm going to give that a positive score as well. Some other fundamentals that I like about Skyworks: free cash flow is $1.134 billion. So very healthy cash flows. The forward yield is 2.4%. The 1 year dividend growth is 13.2%. The PEG ratio is 0.66. So again, this is a really, really cheap stock on some metrics. Now, if you are a trader and you're saying, hey, look, I'm not really, a long-term person. So the stock trades roughly around $104. If you want to use an $11 stop loss, go ahead and do that. That would put you down somewhere around $93. And you know what? That's right around these lows that were made in June. So I think this is an undervalued opportunity. The number two undervalued opportunity is Devon Energy. Look, ticker is DVN. The stock trades right around $70. We all know that energy prices have been really high. We're feeling that pain at the pump. This is a potential way that you can profit from that macro move in energy. So look at this. The big money has been going into this name relentlessly. A lot of energy stocks, right? It's been the number one performing sector in terms of big buying basically all year. Now, it has had some selling. A lot of the energy sector gave back some of those profits. However, it is starting to regain. I wouldn't be surprised if we start to see some of that green over the near term. Now, over the past year, the stock has been a highly ranked stock, and you can see that by these blue signals. And look, the forward performance has been positive on that name. Now, let's go ahead and look at some of these fundamentals, and this is outstanding. Energy companies are just gushing profits right now. 1 year sales growth, 194%, very positive. They're actually supposed to grow their EPS 5.4% this year. That is outstanding right now. It's got a profit margin of just over 20%. And get this, the forward PE of 7.4. So again, very undervalued compared to the market. Now let's look at some of these technicals. The first thing is you're going to get a poor score because the last buy signal hasn't been since May 26. So it's been a while. But it is getting a very good score because the stock is above its 50, 100, and 200-day moving average. So there is some momentum in this name. But these aren't the only fundamentals that are outstanding about this company. Free cash flow of just under $2.9 billion. It's got a forward yield of 6.8%. And it's got a 1 year dividend growth rate of 202%. Now, let's go back here. If you are a trader, you could use a $10 stop loss if you wanted to. So if the stock's trading, say, 68.42, so if it broke, say, $58 on the downside, that would be your stop. But I think there's a lot of reasons to like Devon Energy. For the number 3 undervalued opportunity, we're looking at Pfizer, huge biopharmaceutical name, big time name, during COVID, very, very profitable company. And the big money literally went into this name like gangbusters, literally late last year. It's kind of just been petering out over the past few months. You see a little bit of selling that happened in the name, but if you're worried about a recession, healthcare stocks can be some of the best names that can, handle the volatility. Historically, the name has been a top performing stock over, a big history that you can say, we're going back to 1996. But let's just check in on these fundamentals. 1 year sales growth is 95%. I do think that that is going to come in a lot. It's not going to, keep that trajectory. In fact, their EPS growth is supposed to decline 19% based on analyst estimates. Now, they've got a profit margin of 27.6%, which is great. Got a decent debt to equity ratio of 53%. But get this, the forward PE is just 7.5. So definitely undervalued compared to the market. It's going to get a good score because it trades near its 12-week high, and that's $54. And it's going to get a poor score because the stock is trading below its 50, 100, and 200-day moving average. But if we do start to see some volatility, I do think that Pfizer is going to handle that volatility better. Some other stats that are interesting about Pfizer, their free cash flow is $29.86 billion. The forward yield is 3.3%, and the 1 year dividend growth is tiny at 2.6%. Now, if you are a trader, all right, you could use a stop of about $3.53. So, that would take this name down to roughly $45 and change. The number 4 undervalued opportunity is Archer-Daniels-Midland Company. This is a food company. They do seeds, they do wheat, they do all types of commodities. So listen, we know commodity prices are elevated. This company is going to make more profits with higher prices on those commodities. Now, look at the big money that went into this name, huge big money magnet. Now, again, we know that a lot of these materials names, these commodity names, they came under pressure, but we're starting to see the stock is elevating right now. We can see that this was a top ranked stock multiple times. Let's look at some of the fundamentals here. So the 1 year sales growth, 32%, that is great. The 3 year EPS growth is 19.1%, that's okay. Debt to equity ratio is just at 47%, not too bad. But get this, the forward PE is 12.7, so well below where the market is right now. It's got a couple of good signals here on the technical side. So it's at a 12-week high. That's at roughly $90. And then the stock is above its 50, 100, and 200-day moving average. Now, check this out. It also has free cash flow of $5.4 billion. It's got a forward yield of 1.8%, one-year dividend growth of 2.8%. That's a lot to like about this name. Now, if you are a trader, you could use a $6 stop loss. So if the stock is right around 86, if it closes below 80, you can cut your losses. But I like the fundamental setup for Archer-Daniels. Last but not least, my undervalued opportunity number 5 is going to be Meta Platforms. This is Facebook. Look, they own Instagram, they have WhatsApp. Chances are you're doodling around with at least one of their apps on a daily basis. Now, this stock has had tremendous selling in the name this year. A lot of tech names have just gotten crushed. And you know what? There hasn't been really any signs of life in the name. So this is definitely one of those riskier plays. But let's look at some of the history of this stock. Huge big money magnet over the years. We're talking about, it's been a top 20 stock dozens and dozens of times. So that means that it is a high quality name. Clearly, it's had great fundamental characteristics over the years. Let's go ahead and look at a checkup really quick. So the one-year sales growth, 37%. I don't think that's going to be what happens next year. But if we look at their 3-year sales growth rate, it's at 28%. So that's positive. They're still expected to grow their EPS 11.7%. So that is very good. It's got a profit margin of 33%, a little bit of debt, but the forward PE is at 16.4 times. Again, that's cheaper than the market, but we know the technicals are going to be ugly across the board for this type of name. It's well below its 50-day, 100-day, 200-day moving average, and it's down 52% year to date. But listen to some of these other fundamentals. Free cash flow, $39.1 billion. The PEG ratio, it's a little elevated at 1.54%. Now, if you're a trader and you're like, hey, look, I'm not a long-term person. What can I, where can I put a stop? So at $163, you could use a $21 stop. So that would be right around, $142. You could cut your losses, but I think Zuckerberg is going to turn the ship around. He's been somebody you want to bet on over the long term. I think this name could be a potential undervalued opportunity. So there you have it. Those are 5 of my undervalued opportunities for the month of September. Each of these stocks, right, they have a lower PE than the market, and that makes them potential undervalued opportunities. But remember, always do your own research, right? None of this is personalized advice. Keep in mind that September tends to be a pretty volatile month for the market. Obviously, the market is also overbought on the short term. We saw that with the BMI. However, if you focus on quality stocks, you will win over the long term. I really do believe that. I'll see you guys next time.